Because I know last time we actually chatted, you had a plan to buy a commercial property. Now, it's not that easy to just go buy a commercial property, right? You need some sort of asset base.
Yeah, absolutely. So when I first looked into commercial property, I thought 30% deposit sounds pretty good. But as I went through, talked to the brokers, I was already maxed out on lending for residential properties. So they said 30% deposit requires a very high yield, probably not quite in this market. So he actually said if we wanted to buy a good asset, returning about high fives percentage, you're going to need 40% deposit, which is crazy. No one has 40% of anything in cash. So we used equity for our residential portfolio. But even then, like there's so many steps. Getting servicing through with your equity, equity sitting in your account. You have to set up the trust structure with corporate trustees. You have to engage buyers agents. They have to find the property as well. So there's so many steps associated with it. Settlement was a nightmare as well because we had all the leases in place. Settlement was due. We've done all the checks. We're doing about for a year now. So it's a 12-month process by here. Even on the last minute, like things were not lining up. The bank wasn't liking a few of the things with our names. We'd recently gotten married. So some of Steph's things said her maiden name and some said her married name. So it caused a lot of stress. But in the end, yeah, it all got done. We used equity from our residential portfolio. And mind you, we had to drain every last dollar of equity we had just to get this moderately priced asset across the line because we ended up needing a 38% deposit after all costs.
Wow.
So
Yeah.
that's how we funded it. We settled now. Great to have it in our portfolio because each residential property was costing us 10, 15 grand a year out of pocket. And the commercial
Mm.
is a lot better cash flow wise. And it's also a lot better tenants. They don't have problems. If they do, it's their problems. So they have to cover their own costs. They cover their own council rates, insurance. They even pay for their own property manager, which is something I didn't know during the process. So
Mm.
you pay 6 to 8% for a residential portfolio for the property manager. The tenant even pays for their own management in the commercial portfolio.
Wow.
So it was definitely quite a process. Learned a lot along the way.
Mm.
Even choosing the buyer's agent was a big step for us. Like, who do we want to go with? Who do we like?
Mm.
We met up with three major ones, read all of their books, listened to all their podcasts, and then we found one that suited what we're trying to do the most.
Mm. Jumping back to the equity component, when you say using equity, what does that mean?
Yep. So using equity for a purchase could be for anything. Using purchase another residential property, using equity for shares. Say you've got a house worth 500 grand. You've just bought it. You paid $100,000 deposit, 20%. So your loan is 400,000. A few years go by and that $500,000 house is now worth, say, 700,000. So it's grown by 200 grand, but the loan is still 400. So you've got a $700,000 house, a $400,000 loan. The banks, if you can service it, will allow you to go back to 80% LVR. So they'll let you borrow 80% of that 700,000. 80% of 700,000 is 560. So you can borrow 560. Your current loan is 400. They will give you 160,000 in equity or in cash essentially to use doing whatever you feel like. But your loan is then 560 and you got 160 in cash. So then you use that
Mm.
160 to buy another residential property, to buy shares. I wouldn't use it for anything non-investment purposes because then it's not deductible. But that 160 essentially is what we used. It cost a lot more than that, unfortunately, but used to buy the next property. In this case, was a commercial.
Mm. Would you say you're done with commercial properties after this purchase? Or are you looking at another one? Have you got plans to buy another one?
Think we're done with all properties for a while, to be honest. It's at least overseas where we've got a nice
Mm.
base, but we're ready to just see what happens in 3 years, see where we're at. We're getting to an age where the goals are kind of changing. We don't need to grow a massive portfolio, at least while we're overseas. I think going forwards, commercial is probably going to be all we're going to purchase.
Mm.
Just because of the cash flow wise, we can't afford the drain of residential property too significantly. Sure, they grow up in value lots, which is great, but you can't spend that growth in value too readily without having additional debt. We want to start spending this fruits of our investment journey. So, yeah, the next property will be commercial. It won't be in a hurry, maybe 5 years at the earliest, most likely. And then with commercial, we used a lease stock loan, which is a loan secured only against the lease of the asset. So in 3 years, once the lease runs up, that's when we have to actually get it revalued. And then at that stage, we can take equity out during that
Mm.
mechanism as well. So it's a bit different to residential. You're not going to get a 30-year P&I loan. You're only going to get a 3-year interest-only commercial loan with a pretty
Yeah, yeah.
unfavorable LVR. Residential is done for us just because we can't afford to hold anymore. And I think even as we grow along, like another 5, 10 years, I probably see us selling a lot of our residential portfolio to buy either equities or commercial as we transition our portfolio.